Hey everyone, it is Evan here from The Trade Risk on Friday, January 17th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into our technicals dashboard here. Remember, you can get to this anytime you'd like. If you head to thetraderisk.com, go to /market-technicals. I'll leave a link in the description of this video, but you can come here every day after the market closes. This updates. Had a couple of questions come in recently on finding this. It is public, it's available, it's free. If you like the view here, kind of sorted up with sectors, feel free to bookmark that URL and usually gets updated again after the market closes. So looking into this, we can see that markets finished a little bit mixed here today on Friday, but mostly positive. It was just the Russell 2000, which was closing in the red today, but it was a monster week for stocks. So we actually saw acceleration to the upside here, and we've already been in a very strong trend, and we're actually, kind of accelerating in its slope higher, which we'll point out when we get to the charts. But you can see very strong numbers across the board of the major indices over the past 5 trading sessions, and notice the Russell here played a right out of the gate, right from Monday's session, played some catch up this week. It broke out, and it really did help kind of surge and help lead the market higher. We're above all those simple moving averages in the major indices. When we look at sectors, the one real interesting one at the top here is utilities, up almost 4%, which is a monster move for that group of stocks as well. But then you have some other things that you'd expect, like technology and transports actually is the second and third slot. On the downside, we had energy. Energy is the only sector in the red right now over the past week, followed by financials and biotech. Both of those are positive. A lot of financials reported earnings. We'll talk about that in a little bit. If we look here at major markets, sorry, my volatility is not coming through right now, so we'll skip that. That's not at the top of the list. We really have the S&P, the emerging markets, and China here at the top of the relative strength list. On the downside, natural gas really standing alone here, had a very sharp down week, almost 9%, followed by oil and silver. So let's and if volatility was in there, that would come up there as well in the bottom. But let's jump into the charts now. Let's take a look at the S&P 500. This is the cash market weekly time frame. So each bar represents 1 week worth of trading. And what you'll notice here with the S&P 500 is that we have reclaimed that shorter term kind of steeper sloped uptrend that started at the beginning of December. So remember when we had this kind of I'll call it a wild week, because that's certainly a wild week in recent history here for the market, because it hasn't been so much volatility. But when we have this wide range week down here, that really kind of marked the short-term bottom in early December, and the market was off to the races until just 3 weeks ago, when it started to actually put in some type of inside week here, or nearly an inside week, went sideways. And when we gapped down on this start of last week, and this was around some of those macro war events, we actually held the upper level sort of line of support, that upper level short-term line in the sand. It held exactly there. We proceeded to rally and close at new weekly closing highs last week, and then now this week we put in a very strong follow-through week, getting back up above that accelerated trend line, which started from December and closed us at all-time highs. So if we go down to a daily chart and maybe go to a slightly busier view here. So essentially, as the market has been ratcheting higher here, we continue to draw these horizontal levels underneath us, which represent levels in the short term where buyers are stepping in, where consolidations are taking place, and effectively, kind of tearing up our upper level support area. As you can see, it's been just stacked up week over week as this market's grinded higher. Right now, 32.59, that's still, pretty much the appropriate level. There's a small, if you were to drill down here, you'd probably see something around this 32.92 that was resistance that you might expect to act as support. But really, I'd look at this level here. You could get very short term and look at the open gap here from Thursday and look for the market to hold above there. And then you can start, of course, now drawing some of the more accelerated slopes here on the intraday time frame if you really want to get precise. But bottom line here is that momentum continues to be very strong. Trends all pointing up and to the right, and the S&P 500 is climbing with no overhead resistance, no prior overhead supply. It is closing at an all-time high. Now, the standout this week, and I think the big, sort of news, so to speak, was the Russell 2000, because if you were to look here at the weekly time frame, you can see that we had 3 weeks down where this didn't participate in the rally. So the S&P and the NASDAQ especially were, moving higher, closing at new highs week over week. The Russell was sort of comfortably kind of pulling back here, and then it slingshot to the upside this week, and it put in a 2.5% rally, which is about the highest, I think it's the biggest weekly close, strongest weekly close since September of 2019. So this was a multi-month kind of expansion here to the upside for small caps. And if we were to zoom out now, you can see we're coming back into the prior all-time highs in 2018. And if you were to actually plot this with a total return chart, so if you included dividends in this chart, the Russell 2000 did in fact make a new intraday all-time high today, but it did pull off of it. I don't think it made new total return all-time highs. But if you were to factor in dividends, in other words, if you were just holding the Russell 2000 for the past, couple of years now, you'd basically be back and made whole from the all-time highs made in 2018. From a price perspective, you can see we're still below it, and you can see, about a 1.5% move would get you back there if you're not factoring those dividends. So Russell 2000, big story this week, getting some rotation and helping, keep this market alive and continue to advance those gains. NASDAQ 100, nothing wrong here either. This is continuing to power higher in this fairly steep channel. You can see it's been riding the upper bounds of it, the upper end of this channel here. It continues to be strong. It's been our market leader. We'll still call it our market leader, even though the Russell kind of beat it out this week in isolation. But the NASDAQ continues to perform. And the interesting thing here is, of course, that we are now, we officially kicked off earnings season. We have a lot of those tech companies that are going to be reporting in this that are in this index. And I mean, frankly, there's really like 5 stocks that make up all of this index. But that aside, we'll have earnings coming out soon for tech and some of these leader semis, and we'll see how those earnings fare versus market reactions the following days. So do keep that in mind. Double check those holdings. And with that, let's jump into some other major markets here. We'll go to TLT next, which was down just slightly here on the week. Big move on Friday. It did close down almost 1%. It had some gains going this week. It was grinding higher. It was starting to move back up to that 140 level, which I believe we talked about in last week's video as an important area. But you can see it quickly got a rug pull and fell back into the 130s. So when we look here at TLT, it looks like it's still potentially trying to, carve out some bottom here, throughout the beginning of this year. The longer term consolidation still pretty much intact. So we're really still kind of waiting for momentum in the bulls to potentially get their act together to start clearing over some of this resistance. If we look at metals here, GLD acting still pretty well here. It is kind of still in consolidation mode. High volume came in on Friday, though. Looks like it's trying to lift up here, trying to maybe resume the momentum surge that it saw throughout December. We'll see if that happens. So far, we get a potential kind of higher low to at least use right now is 145. We'll see if that can actually hold. Might need a little more time here for gold, but still, generally speaking, is set up pretty nicely going forward. If we look at silver, Silver here, still kind of the weaker, slightly weaker disposition. This is kind of the narrative we've been mentioning here in past videos. Silver looks good too, not as good as gold. Didn't quite break away and see the strong momentum surge like gold did. There is still some prior supply in here, so silver really still needs to get over about 1750 or so to start, really fueling to the upside. If we go to energy next, USO still kind of dancing around here. Remember, it had that sharp rejection or sharp pullback, reset, if you will, off of those $13 levels. It came, smashing down into this trend line, which started in early October. It's trying to hold here, kind of got down as low as $12. In our last couple of videos, we said, this is pretty much the sweet spot where we'd like to see the reaction at this area, see if buyers step in. So far, looks like they are. Maybe a little too early to tell. Depends how comfortable you are to call the all clear sign. But for now, it looks like this level, this area is holding, and that's a good thing for bulls going forward. On the energy circuit that's not holding is natural gas. So natural gas continues now to look like a disaster. It's had many attempts in here in the past couple of months to try and hold, to try and put in some bottoms. We've attempted to be optimistic here in the very short-term tactical side that this might be able to put in a rally, but it just has not manifested. We saw more heavy selling this week, down almost 9%. Looks like Friday specifically here being one of the heaviest volume days that we've seen going back, looks like over a year. So it looks like going back to the end of 2018 is the last time we saw volume like this. So, the story continues to the downside here and remains uniquely difficult to put in some type of floor for natural gas. Now, with that, let's jump into, I think that covers all of our major markets. Let's take a look at some sectors here now and take a look at top performing, worst performing. So top performing sector this week, again, was utilities, which is very surprising here, especially the risk on appetite, that we saw this week. But it did consolidate now for, it was about 3.5 months or so. Since October, it's gone nowhere. It was trading underneath $65. It retraced as low as 61, got back up to these prior highs, danced around here, put in a sideways, consolidation, and then it got off to the races this week. Just a real strong kind of breakout pattern there. Volume kind of coming in about around average, but still some just very strong looking candles here as this extends itself to new all-time highs. Stretch, so you got to be careful chasing it, but certainly a fresh breakout there for utilities. XLK, when we draw here kind of the slope at which this has been rising recently, you can see now that this has jumped to the other side. It's kind of breaking out now and again picking up that acceleration to the upside. So even though technology has been, quote unquote, extended and frothy and whatever label you want to put on it, it's actually, increasingly doing that. It's getting even more steep here. And, sometimes when things get really vertical, especially after a long move, you could call those, potential blow-offs that you could look for, where you just get basic, kind of buyer's capitulation, max FOMO, if you will. I'm not sure if that's happening here. It's tough to gauge sentiment right now, just generally speaking. There seems to be a lot of, even the rally that we have, there still does seem, to be a good amount of pessimism or just doubt out there and looking for that pullback in the market. And, again, when we look here at data and we look at where the markets come from and the rally that we've seen, it makes, complete sense to expect a 2, 3, 4, 5, 7% pullback here at any point, and it would be, completely kosher in this uptrend. But if sentiment is still, not totally bought in on this market, if there's still enough people on the sideline or stubborn shorts or just aren't invested, then maybe there's more to go in this rally. That is a total tangent and, not necessarily specific to XLK, just markets, broadly speaking. But sentiment's a tricky thing to measure. So, we will stick to our charts and map our levels out accordingly. Take from that what you will. XLB, third top performing sector this week. This is a good save for materials because this looked ugly last week. When this got, pretty sharply rejected off of these highs here, there's really no reason to be aggressively long materials because of that pullback, because of just all of the supply that is lingering over here around $61. The fact that it's now getting back up here and it's trying to, grind higher again, now it starts to look interesting again. If it can show some more conviction, hold above 61, this looks pretty interesting. On the downside, energy kind of back to, the bottom here. We've talked about this, trying to potentially put in a more meaningful longer-term bottom. Maybe it is, maybe it isn't. It's still messy down here. It's still, a very lackluster place to be, generally speaking, but, it has been grinding lower here. Maybe buyers step in around this $59 area. Be a reasonable spot to do so. If they can do it quick, maybe we could see a strong rotation there, but for now, a little tricky there. There's just other sectors that are working. Financials, I still like. Financials we talked about as a potential catalyst as they started to report earnings. We've got this nice 1 month consolidation that's taken place. They're trading at all-time highs. Nice orderly consolidation to me. This still looks good. They didn't actually, they of course didn't have the breakout after some of those initial earnings reports. Maybe it turns into a topping pattern, but for now, I'll still give the benefit of the doubt to the longer-term trends here in financials. I think there's some opportunity there. And biotech was underperforming this week, but still, kind of similar to financials. It's been consolidating and had a very strong October through December, and it is mostly consolidating through time. In terms of the Merlin strategy that we trade, we did pick up, a decent amount, or at least a few names in the biotech space. Not today, but over the past 5, 6, 7 days. So there's been some interest there, at least from our system perspective, as scouting out opportunity from a swing trading basis. We'll see how that plays out. But biotech, I still generally like it here. It might need more time consolidating, but it's fairly actionable where it is. So that's it. That's what we got for the weekend recap. Lots going on, lots of headlines, but markets accelerating to the upside. So quite the strength out there. Got some potentially new leadership groups. And of course, we got a lot more earnings on deck into next week. So that's it for me. Thank you so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.